Good morning, Armor Insiders. Welcome to everybody who's joining this morning and joining our morning meeting. This is a virtual hedge fund. What we're doing here is we're managing capital together as a group. It's our live trading desk. We're getting started this morning. What I respectfully request, I'm going to share with you information about how I'm managing private capital for myself and for others. But at the end of the day, you got to think for yourself, figure out your risk tolerance, your goal, all that kind of stuff. Make your own decisions and be the smart money. So let's first begin with the big picture. Where are we in the swing cycle? You can see up on the YouTube channel that I've got there, I've pinned for you step by step how to use the ARMR information to make money in the market. Okay, so you can watch that video later to see exactly what we do here. But to fast forward a bit, before we make any decisions on individual stocks, we look at our algorithms for our indexes. 8 out of 10 stocks follow the market. So we got to figure out where the market's going first, read and react to that, and then build our portfolios. So we'll go over where we are in that cycle. Then we'll talk about where we're leaning. I title this discussion today, Leaning into ARMR IG. So we build a portfolio. I've got 3 different portfolios. Macro, which is our focused portfolio, only investing in indexes, where usually we're using double or triple the indexes to get the performance of individual growth stocks without having to worry about the risk of individual stocks. Okay. Then we have our innovative growth portfolio, speaks for itself. Then we have our turnaround dividend portfolio. Okay. And so we balance those 3 portfolios, leaning more into one or the other, depending on where we are in the swing cycle. So I'll go over with you top stocks that we've bought recently. There's one stock highlighted today that I'll be adding today. Earnings are tonight. That's something I almost never do, but I'll explain why I'm doing it today. So before I dive in, grab your pen, piece of paper, get yourself ready. And like I said before, remember, think for yourself, make your own decisions, no matter what I say or anybody else you hear. You can't take that as investment advice because we don't know who you are, right? So only you know. You got to figure out how to take the information and make money with it. All right. So we're going to get to this chart right here in a minute. I've been sharing with you for the last 4 or 5 trading sessions. Are the mining stocks leading the metal? Because if they are, we're about to have a massive up move in silver. So we're going to get to that in a minute. But before I go there, what I want to share with you is the cycle entry point here, just to remind everybody where we are. Risk monitor, this is the S&P. The risk monitor went green down here on April 23rd, 24th. That's when we loaded up our portfolio. We like to get the most amount of risk on closest to the stop. So when the risk monitor goes green, the stop is the low of the day it went green. So the stop is very tight. That means our risk is limited. The upside is unlimited. And so we've got that optimal reward to risk setup. And that's why we load up right there. So we load up and boom, the market blew out. Then it goes through a consolidation period. If you're a William O'Neill acolyte, as I am, you would know that when you get that first surge, generally you'll go through a consolidation period. In a wicked bull market, that period will last only 4 to 7 weeks. O'Neill calls it a 4 to 7 week tight pattern. This is week 4. So the market is extending higher in week 4. It's not even waiting 7 weeks. I submit to you that I expect the market to challenge before the end of this month and take out the all-time high. And one reason I think that is that we loaded up on momentum down here, the momentum index. And momentum's leading all other 10 indexes we use for our risk monitor. It's why we added momentum. Okay? Along with the S&P and the NASDAQ 100, we added momentum. Momentum's already hit an all-time new high. Earlier this week, we added small caps. So that's the lagging group. So in our macro fund, we have momentum, the leading group. We have the NASDAQ 100 and the S&P, which we use QLD and SSO. So we've got double the performance S&P, double the performance of the NASDAQ 100. Okay. And then we went with triple the performance of small caps. along with our momentum position. So we've got the leader, the lagger, and the fat part in the middle covered in our macro fund. And let's be honest, we're cooking with grease. We're having a big year right now. We avoided the collapse in the market. This pink box is where we went risk monitor red. So we exited right near the highs of the year. And then we picked it off when the bottom structure set up in late April. So we're making it coming and going in that portfolio. Now let's talk about precious metals for a minute. We've got to go over this part of our portfolio. We've got about 20% allocation. So when I talk about the flagship fund, I share that with all of you so you understand how I take this information and manage money for others. Okay, so these portfolios that I have, that's my personal capital. I run a family office. Okay, so the family office uses literally everything in those three portfolios is what I own, my family office. So ARMR Insiders, you know, you can go to the website and you can go look at the portfolios. I show you what my entry point is, the date I bought it, stops, targets, okay? But you'll also see on that spreadsheet where I share with you what percentage of these positions are in the flagship fund. And the flagship fund is what I use to manage capital for others, Rosenthal Capital Management, right? That's my business, my sister business, right? So we have ARMR Investing, where I share information with you all as subscribers, and you're executing on your own. That's what it means to be an ARMR Insider. You're using the information to manage your own portfolio. Or, of course, I run Rosenthal Capital Management, and I manage capital for others for whatever reason. Some ARMR Insiders have requested I do it because you can't be on the desk all day, and so I'll execute for you, that type of thing. And, of course, I've been doing this for 35 years, so we have a client base of guys we've been working with for like 35 years. And I love you guys, some of which are ARMR Insiders. You guys are on the desk with us all day as well. So I digress. What I share with you on that flagship fund is the allocation percentages of how I'm using the information to manage a portfolio. My own family office is always going to be more aggressive. And when I'm a fiduciary running money for others, I'm a little more conservative. And so I try to show you how I take that information and use it. All right. So we've got about 20% exposure to precious metals. And the question we have to ask ourselves this morning for that flagship fund, is that enough? How do you know you're in a bull market? How do you know you're in a bull market? I'm going to give you a couple markers. Forget about the fact that we know because we're long in an aggressive way and we're making a lot of money. I don't mean it like that. The risk monitor goes green. We know, we're in a bull market. But how do you know you're in a serious bull market? Here's a couple of ways you know. Number one, there's too many ideas for the amount of capital you have. You just can't get them all. They're popping off everywhere. You're looking, I can't believe I missed that one. I can't believe I missed that one. But at the end of the day, your portfolio's up 2-3%, like your whole portfolio. So your whole portfolio is going like this, and you can't believe the ones you're missing. That's a bull market. And it's like a runaway bull market when there's just too many ideas to be able to handle. Here's another way you know. Bad news doesn't put stocks down below key levels of support. And it doesn't put stocks down for more than a couple hours. Maybe a day or two if it's an earnings announcement. Maybe it wrecks it down right to a location, skyrockets again. You go, wow, I don't get it. Stock dropped 15% on earnings. Now it's at all-time new highs. I thought that was bad news. That's a bull market. I mean, I'll give you an example. Here's a high-profile example of what I'm talking about. On our trading desk, we're long Palantir, okay? And we like to trade around the course. So we booked some profits in the yellow box, and the stock gapped down 15% on earnings. So we took what we sold before the news and we added it back on the gap down because we thought the number was great. And the stock immediately went to new highs. That's a bull market. That's a bull market. You'll get pieces of news like oddity. All right, we're long oddity around 61. Oddity had a huge breakout on earnings. And then the company announced, though, the CEO announced he's selling 5.5 million shares. Stock dropped 15, 20%, whatever it was. We loaded up right there. Stock blew out to new highs already. Bad news doesn't put stocks down. In this particular case, it's not bad news. And I explained to you guys why we were loading up on that news, right? I won't go over it again. Sometimes when a CEO is selling, it's actually very bullish. In this particular case, it has to do with liquidity, okay? But my point is, what looks like bad news out there, here's another example. CrowdStrike. Okay, we bought it here, and I booked my profit like I always do. I sell some in front of the news, and I sold the rest in the aftermarket because I didn't like the number. So I thought it was bad news, okay? Stock was down a little bit. It held support. It held above our primary stop. I could have stayed with the stock. It closed higher off the low. My point is, when companies lower guidance or miss a number in a bear market, the stock gets annihilated. In a bull market, drops to support, holds support, starts going up again. These are ways you know. These are markers to help you know what type of market you're in. And of course, conversely, good news is blowing stocks out. So those are the ways you know you're in a bull market. So now we go back to managing a portfolio and allocation. How do we figure out what to put where? Because there's just too many ideas. So is 20% enough precious metals? Maybe it is, because I have to take from somewhere else, and I don't want to do that. But I wanted to share this chart with you because silver's up 3% this morning. And for the last couple of days, if you're following me on X, I shared this chart with ARMR Insiders and with you guys on X. And it's a chart of the mining stocks versus the metal. SILJ, the small cap miners, versus SLV, the metal. How do you know you're in a wild bull market for precious metals? The miners lead the metal. I've said to you since the start of 2025, I think this is the year the mining stocks take over for the metal. For the last couple years, we've been making money in precious metals, but most of it's been in the physical. Physical gold's been outperforming everything. Physical silver's been sleeping. Mining stocks have been underperforming. I said to you, I think 2025 is the year mining stocks take off, and we start to get what is historically I don't know if correct's the right word, but historically the structure that makes sense to me since I've been trading precious metals since 2005. And that is the miners lead the metal. And so that's exactly what happened in here. I put this question mark out here because I said, look, the silver stocks broke out 4 days ago, 3 days ago. The silver stocks blew out. Maybe 5-6 days ago, they broke out of this pennant. And I said, look, silver's still in the pennant. Is it going to hit this green box and blow out? Well, the answer is yes. This morning, SLV's trading above 32 in that green box now. I shared with you yesterday and the day before, I said we should own AGQ, double the performance of silver, because it's going to catch up to the silver mining stocks. And of course, it's blowing out today. It's up, 6-7% today. Is it too late to increase our mining position? You tell me. You tell me. Let's take a look at the chart. Sometimes when you buy something incredibly right, we bought this cheap down here, $12 on SILJ. I think it's blowing out. So we bought it really cheap, but you forget what the bigger structure is. Go look at silver. Look at silver stocks. They're not even close to the highs of 2021. They should be trading up here by now. It's so early in this process. Look, I'll squinch it down, make it easier to look at. It's so early. We just bought it wicked cheap. So there'll be opportunities to add to it. Let's look at SLV. See, silver is trading above the high of 2021, and it's about to break out of this pennant. Okay, so silver right now is breaking out of a really phenomenal pennant. Do I want to own silver itself? I'm telling you, I think this is the year for the mining stocks. So I think silver is going to go up. There's the pennant. It's breaking out of it today. It's going to blow out of it today. But then you look at silver's making a new high, but look at the mining stocks. They're not even close. Man, this thing should be trading $18 to $20 by now. So we own a lot of the silver stocks. I'm probably going to lean into more of the silver stocks. I'm not going to buy AGQ, but you could. I mean, twice the performance of silver. You probably could make a lot of money there. I think that pennant breakout is going to be awesome. So I'm torn. Maybe I want to do AGQ. Maybe I want more of the silver stocks, because when the miners get going, man, it gets crazy. Let me give you an example. Gold miners, right? We added the Alaskan stocks over the last couple of days. Nova Gold blew out yesterday. We're long THM. It's blowing out. We're long, NAK. Blowing out of a pennant. Okay? So the miners lead the metal. 2025 is a miner year, I think. So I'm probably going to just keep bumping up my exposure. Of course, we're long Nugget, which is double the performance of GDX. So decisions to make for the flagship. Do I want more? I'll have to think about that. Let's get to a couple of stocks we've added recently. I said to you guys that I'm leaning into ARMR power play names. ARMR innovative growth. So I keep a balance, maybe 25% turnaround dividends, 25% innovative growth. And you could think maybe 50% macro. Put aside precious metals for a minute, because obviously 50% macro is not going to work. So 30% macro, 20% precious metals. That's where I'm at now. So we use double or triple the indexes with 30% of the capital to get the exposure we want in the flagship fund. Okay. So for 30% indexes, we're basically capturing 100% of index movement. And then the rest of the alpha, that's our base. And then the rest of the alpha comes from precious metals, turnarounds, dividends, and innovative growth. I'm leading into innovative growth because as this bull market takes off, those stocks should really outperform. Okay. So, we already have things like Pure Storage, Palantir's in the portfolio, but recently we have Roblox in the portfolio. We added in the green box here, and it's gone absolutely ballistic. Okay. Recently we've added shares of Coinbase again. So we've traded it a couple times. We've added it back. So these are recent positions we added this week. Added shares of Doximity yesterday. This is a stock we love. We made a lot of money on it last year. And this gap down in here, we exited in here. We sold some in the yellow box, some in the pink, bought it in the green. So that was like a break-even trade. But it's made a perfect double bottom on the 200-day moving average. And as I listened to that conference call and kind of read through the lines, I think the management was being a little bit conservative, and that surprised the street on their guidance. They had good top and bottom line numbers. Their guidance was a little bit conservative, and so the market didn't like that. But in a bull market like this, that type of weakness creates opportunity. So I want to get long positions closest to the stop. So we added it yesterday. Stop is the low of yesterday. Takes out the stop, we're out. But if this is the perfect double bottom on the 200-day, I think it is, we're going to look back and say, wow, that was a gift. We're added shares of Mobileye to the portfolio. This is not a new issue so much as a spinoff, right? It was owned by Intel and spun out. Gone through a serious downtrend, Fibonacci fan sequence, about to break the third fan. The last quarterly earnings number looks like the turnaround is beginning. So here you have an innovative growth stock in the midst of a turnaround, in a group that's getting hot again, which are the semiconductor stocks. So the semi stocks, if you recall, we've been right long and short on this thing. This was the cup and handle breakout. I told you we were going short in here, which was in February, for a retrace down to the breakout, which is this cup and handle breakout. It went right to that white line and reversed. All right, now they're starting to come back into semi stocks. Many different ways to play that. One of them for me is a turnaround story in Mobileye. It's early here. If it closes above 17.50, let's say 18 bucks, then I think it really gets legs. So I bought it early. I like to put positions on closest to the stop when rewards worth risk. Risk being usually the low of the day I'm buying it. So everything I'm talking to you about today, if it hits stops, I'm out. You hear me talking a lot about a bull market, and these are all the markers of a bull market. Let me tell you something that's fact. If the market reverses and hits stops, I'm out. So we can have this conversation today. ARMR insiders will be on the desk with me all day, and you'll see me changing the portfolio. If we have to defend, I've got my risk manager hat on now. I'm riding the wave because we bought it right. And now we're just making subtle changes, leaning maybe into some of my innovative growth names, but ready to exit if we have to. Rolling stops up as we go, booking some profits at targets. You know, one of the ways I funded Doximity is by booking a gain in Boeing. We bought Boeing off of the double bottom here. It ripped higher. It's 3 standard deviations above the 200-day moving average. Doximity is on the 200-day moving average. I like to sell strength and buy weakness. So ARMR insiders, you get that. We trade together all day. Anybody else watching right now, it's important you understand when I talk real bullish like this, it doesn't mean to run out there and go buy everything today. That was in April. And it also doesn't mean that we're going to be like a deer in the headlight. The market reverses, starts breaking down, and we don't know what to do. We know exactly what to do. We have a strategy as written, and we'll execute it. We're not in the game of guessing what's going to happen next. Let me tell you something. Everybody and his brother's out there telling me how god-awful treasuries are. I get it. All the smart money is telling us, oh, my God, the world's coming to an end. Treasuries are collapsing. You know what? It's not collapsing. Treasuries are trading in a range they've been trading in since 2023. If it stays above the low of that range, it's just trading in a range, and the rest of it's noise. It's not my job, and it's not your job to guess what's going to happen next. It's our job to read and react to what's happening now. And what's happening now is a wicked bull market. And we'll ride that until we read and react that the move is ending. Stops will get hit. Good news will start to be sold instead of bought. A real breakdown occurs in Treasury bonds below the low of 2023. These would be the things that would get us to change our stance. Let me finish up right now by rolling over to our highlighted stock of the day, and that's going to be IoT. I'm doing something today with Samsara that I almost never do. So before I share it with you, let me talk about the risks. On this desk, we like to say, you have to earn the right to take the risk. If my portfolio wasn't up as much as it is right now, I might not make this trade. If I'm wildly underinvested, like most professional money managers, hedge funds, they're wildly underinvested. They're short this market. They're totally screwed, okay? If I was trying to catch up to the market, I wouldn't make this trade because I don't like buying things right in front of earnings. I like to pick off the entry point early, have it go up into earnings. I sell some off to book a profit, and I'm willing to trade around a core position. That's what I like to do. We did it in Palantir. We did it in CrowdStrike. We did it in Pure Storage. That's how we like to run it. We did it in IBM. So it's very rare for me to put a position on today with earnings tonight. But number one, I've earned the right to take that risk. Number two, I'm going to put a position size on where I can handle the risk. If what I'm about to tell you turns out to be wrong, the stock's going to gap down today. That's a risk you have to accept if you buy something in front of earnings. The reward is, if I'm right about what I think on this company, the stock's going to gap up. And so I want a core position on now, and then I can manage my position going forward. If I have a core position on and it gaps down and I like the number, I'll double it. If I have a core position and it gaps out, I'm doubling it. If I have a core position, it gaps down and I don't like what I saw, I'll sell it and I'll take my loss. Okay, so that's the risk part of this discussion. Now let's get to why I'm doing it. Samsara, the innovative growth portfolio, what I'm doing with that portfolio is filling it up with innovative growth stocks that are leveraging artificial intelligence to dominate a niche where they can build a moat around their business. In other words, there's no competition at the size and scale of what they're doing. There's no competition. Those are the stocks I want in my portfolio. And I call them ARMR power plays. My handle on X, power play investors. That's what we are. We're looking for the power play. I want a high margin business model with margins going up. I want to see quarterly earnings and quarterly revenue ramping at double and triple digit rates. Revenues triple digit, earnings high, double, 25, 30% plus earnings growth. These are the things I look for. And what we heard yesterday, we listened on our trading desk, ARMR Insiders, we were listening to the Samsara call from March. The stock was down big in March because the market was crashing, okay? And they announced earnings and the stock cratered. That's because in the bear market, good news gets sold. If you listen to that conference call like we did yesterday, everything is going right for them. Everything. And the stock got sold because it was a bear market. And I think that creates opportunity. I think that's creating opportunity for us. If it was a bull market we were in March, that earnings call would have blown the stock out above 60, in my opinion. I could be wrong. I could lose money tonight. But in my opinion, if that earnings call in March happened now, the stock would have blown out above 60. So tonight, if they have another conference call with earnings that support what happened in March, I think the stock is dramatically undervalued. One of the things that makes me most compelled to put this position on that I heard on the call last night was the return on investment for their customers is within 90 days, 60 to 90 days. So a customer that decides to use this company's product gets return on investment inside of 3 months. My whole life, when I've invested in innovative growth in a bull market, nothing works in a bear market. Risk monitor goes red, market's going to crash, nothing's going to work. I hope we all understand that. In a bull market, innovative growth stocks that have an ROI of less than 90 days tend to be phenomenal investments. And here's an easy way to understand it. Their business is almost recession-proof. If it saves their customers money and you're in a difficult economy, the customer wants to work with them even more because they can say, look, I'll get a return on this investment immediately and it will lower my costs. That's what Samsara is doing. As an example, one of their biggest growth potentials or growth experiences last quarter was in the construction space. And one of the analysts said, God, how did you do that? Because the construction spending is going down right now. How did you have such a big pop in earnings from the construction space that you service? And they said, well, because within 90 days, they get return on their investment and it reduces their costs dramatically. So a company that's trying to manage through a difficult economic environment wants to manage costs. And this company has an answer for them. So to me, it's a very compelling story. And I feel like I have to keep saying this because I could be wrong. I'm making a guess on the fundamentals. We'll see if I'm right tonight. Stock could gap down tonight. I could lose money. I've earned the right to take that risk. I'm going to use the right position size to deal with that risk. Then I'm going to either increase my position in the after hours, maybe. If I see the number I like and it starts to go, bang, I'm going to add to it. I'll stay on the call with you guys when the market closes and we'll all listen. We'll have a live stream going and we'll listen to the call and see. Maybe I got to sell it immediately in aftermarket. They missed the number, lower guidance. We're going to get rid of it immediately. But if they beat the number and raise guidance, bang, we're going to be wanting to add to that position, I think. Okay. So I'll work with all of you at that time. Any questions you guys have for me, you can always throw them in the comment section of this video. I don't see anything right now. So it's 9:20. I've got to go get the live trading desk started. Armor Insiders will work together. I'll see you in the Slack room. Click on the link and we'll start our trading at 9:30. Anybody else, look, if you're watching this later and you have a question for me, feel free to comment. Don't forget to like this video, comment on this video, share this video with people who need help. Don't share it with everybody. Share it with your friends who need help. Okay? I'm here for you guys. You want to pick up the phone, call me. You can always do that too. Okay? Everyone have a wonderful trading session. And remember, forget about everything I've said. Find a quiet place. Figure out your strategy. What's your risk tolerance? What's the goal? Execute that and be the smart one.